A surprisingly strong jobs report for the month of February. Gus Faucher joins me now. He's Deputy Chief Economist at PNC. Gus, good to see you. And this report, some very strong numbers, not just for February, but the last couple of months now.
That's right. We had 242,000 jobs added in February, but we also had an upward revision to job growth in December and January as well. So the 3-month moving average of job growth was 228,000. That's a very, very good number and indicates there's no sign of slowing in the labor market.
And when you look through the report and kind of pick through the highlights, what did you think stood out to you? I did see that average hourly wages, for instance, dropped a little bit from the prior month.
That's right. That was a disappointment. We saw a 0.1% decline in average hourly earnings. That was after a big 0.5% gain in January. So the hope was that there would be some momentum in wage growth. I think that we will see average hourly earnings growth pick up as the labor market continues to tighten. And we'd like to see stronger wage growth, stronger income growth to power consumer spending. Another highlight that we had was we had a decline in the U6 rate, the underemployment rate, from 9.9% to 9.7%. That's good news. It means we have more people working full time. It means we have people who've been kind of have dropped out of the job market coming back in. So that's a very positive for long-term growth in the labor market as well.
And in terms of the various sectors where we saw hiring, I guess not too surprising, healthcare is strong, decent numbers too in retail.
That's right. Consumer-oriented industries are really leading job growth right now. So things like leisure, hospitality services, retail, trade, education, and health services, those all look strong. Construction was very good. We had 19,000 construction jobs added over the month. So we're seeing improvements in both residential and commercial construction. So good news there. We did have some job losses in manufacturing in February. And then again in mining, obviously, with the downturn in energy production, there are layoffs in that industry. So it's really service-producing industries and then construction that are leading job growth right now, with manufacturing and mining being the laggards.
Gus, I'm sure you hear this yourself. You'll talk to various people, and people still don't believe we're in this economic recovery here. It still doesn't feel like there are all these jobs out there. So why is that exactly?
It has been a difficult recovery and expansion, no question about that. If we look at GDP, the economy's been expanding for almost 7 years now, so it's been a long time. But the labor market just hasn't been where we want it to be. The unemployment rate has moved below 5%, but it's not quite as good as a 5% unemployment rate would normally suggest. Wage growth, as we discussed, has been lagging, and I think that's a big reason why. But I do get the sense, if we look at consumer confidence measures and consumer sentiment measures, that people are feeling better about things, but we're not really in that sweet spot where people say, hey, this is a really good economy. I think we will get there towards the second half of 2016, but it has been a long time coming.
Are we, though, in the sweet spot in the eyes of the Federal Reserve? Does this report increase the chance that the Fed might increase rates again in March?
I don't think we're going to see a rate increase in March. I think given the turmoil we've seen in global financial markets, the Fed is going to hold off. I think by the time we get to June, however, with job growth remaining solid, we are starting to see some signs of a pickup in inflation. And so I think that we will see a rate increase in June, assuming financial markets have settled down by then, as they appear to be doing. It's going to be very gradual. I think we'll see 2 interest rate increases this year, maybe another 3 or so in 2017. But interest rates are going to be rising. I think that, this solid jobs number puts talk of recession further in the background. And I think that the Fed is going to feel confident enough to raise rates when we get to June.
Gus Faucher, great to talk to you. Thanks so much.
Thank you.
I'm Rhonda Schaffler for TheStreet.